Now, for a check on the media sector's performance on the share market this week, here's Chris Weston from IG Markets.
Yeah, good afternoon, Bridie. I'll probably start with the bright spots, seeing as there's not a huge amount of them in our market at the moment. We have seen News Corp get off to a good start today. The stock's up about 0.3%, given the news of the corporate reshuffle that's potentially taking place there. On the other positive side, we have seen Southern Cross Media. The stock's up about 1.5% today, although I do believe it probably could fall back a little bit into as the day goes on. They've come out today suggesting that they're going to be doing buying back 5.4% of the total shares on issue in December, which should be, help their valuation along quite nicely. They've said that their dividend payout ratio is going to be between 60 and 70%, and it shows with the huge cash flow, free cash flow they've got of around 160 odd million, that they can reward shareholders quite nicely. So they're doing quite well today. On the downside, over the week we have seen APN Media down about 6.4%. Now they've confirmed that they're considering ways to expand its outdoor operations, including partnership opportunities, which I think has been in the press quite a lot recently. It had been speculated they're potentially looking to sell around about 50% of their outdoor unit with the proceeds there to fund their Asia expansion. Commonwealth Bank, CBA, have put out a note to their clients suggesting that they see two different scenarios playing out with APN. The first one, selling 50% stake in their outdoor and rolling it into some sort of joint venture. The joint venture would then acquire 100% in iCorp, which Ten currently owns at the moment. They'd look to gear that up to about 1.5 times and use any kind of proceeds to pay back debt. The second scenario would be the same in terms of creating a 50%, selling 50% and creating a JV, but they'd look to buy 00 Media, which would be about 4 for 5% EPS accretive, again looking to use any proceeds to buy back debt. So shareholders haven't rewarded that too favourably. Stock, in terms of which has performed the worst, is Fairfax. It's down 9.5% for the week. We saw Goldman Sachs revising their earnings assumptions for the company based off their AGM and different other factors, external factors which feed into their models. And as a result, they've taken their net profit for the full year down to around 221 million. That's down about 6% or so from their previous assumptions. Now, they've also taken their dividend down to about 4.7 cents for the year. What's interesting here is that the stock's about 10 to 11% away from its all-time low at the moment. It's had a big sharp pullback, despite the fact that they've, coming at that trade me IPO. So certainly coming up to some very interesting levels on Fairfax at the moment.
Coming up on Media Week, what do advertisers think of Nine's strategy of spending up in 2012 despite its mountain of debt?